is DevOps Radio, a monthly podcast exploring the ideas, approaches, best practices, and people that create and deliver the software and applications that the world needs at the pace it demands. It's the Wild West out there, and the laws are meant to be broken. So let's explore the conventional, the unconventional, what worked, what didn't, and what might. Broadcasting from the beating heart of Los Angeles, here's your host, Shawn Ahmed.
Welcome, everyone, back to DevOps Radio, Episode 3. I'm so glad to have you back with us wherever you are. I hope you're safe, healthy, and so is your family and loved ones. It's certainly been a tough time, and I hope together we will come through this COVID scare and pandemic as the year moves on. Today, however, we're excited to talk a little bit about the future of FinTech. The idea popped into my mind not too long ago when I happened to be reading one of my favorite subreddits. There was a post in there, and somebody said, every child is trained in technology by their parents to be one generation out of date. And I thought to myself, how true is that? The way that I thought about the world and the things that I learned from my parents at the time I was young, in no way truly is representative of how I live my world today in an entirely digital experience. And as we see more of the analog experiences in the world go away, I thought, how will I be teaching my son? And nothing can epitomize that more than a little experience I had with him recently where I was writing a check and I thought that was totally normal and sent for a payment. Meanwhile, he thought that was completely backward, but he thought it was totally normal and natural to get salaries paid in Bitcoin. And for me, it was completely in the reverse. And so the topic of how does that future look like and what's our role in it, and especially as it relates to our relationship with money and financial services and our banks, that's a critically deep and important relationship that we have. And to talk a little bit more about that, I couldn't be more excited about having our guest, Chris Skinner, on board with us today. He definitely does have an educated opinion or two about that subject and what the future might look like for financial services and FinTech and so on. He is known as one of the most influential people in technology and known as independent commentator on the financial markets through his blogs, through BBC News, Sky News, CNBC, Bloomberg. These are just a few places where he is frequently a speaker, a commentator, and an expert. But not only that, he has done presentations, he has done keynotes, he's presented alongside some of the largest and leading world figures that you would think, like Jack Dorsey, Hillary Clinton, Richard Branson, Meg Whitman, Bill Gates, or Clive Woodward. He's advised White House. He's advised multiple governments around the world and large companies on the financial services markets, the trends. So we are just extremely, extremely excited to have somebody of Mr. Chris Skinner's stature on our show with us today to kind of talk to us a little bit about the big topics on what does that 10, 15-year future for FinTech, financial services, and our relationship to it maybe look like. And from that, I hope we all as developers and others in the software delivery lifecycle can draw some inspiration and find some nuggets that will help us think about what we have to innovate and bring to the market as we go forward. So please welcome to the show, Mr. Chris Skinner. Chris, welcome to the show. We're so excited to have you here with us.
It's great to be here, Shawn. Thanks for inviting me.
I'm looking forward to our conversation today, and we're gonna cover a lot of topics and a lot of ground today. I thought we'd talk a little bit about FinTech adaptions and evolutions, and especially as it sprung on from the pandemic. And I thought maybe one place we could start is for our listeners to just get a basic, I guess, frame or definition of what it means to be a FinTech. How do you define it?
Well, I define it as the integration of technology into financial services. So finance and technology is FinTech. But what's actually been happening for the past 15 or more years is thanks to cloud computing and the smartphone, that thousands of companies around the world have seized that opportunity to create very niche specialist services around finance. And so they automate little pieces like checking out online or getting a loan or doing a trade, rather than trying to be a full service bank. And they do that with cloud-based software, which can scale immensely. And you've ended up in the last 15 years with around more than 25,000 companies globally getting hundreds of billions of dollars of investment, last year $95 billion, to grow their businesses and become support services for banks, or in some cases replacement for banks.
Thank you for that definition. When you define it as clearly as you just did for our listeners, I can't help but think that, there is an ongoing acceleration, and has been, it feels like, for the last 2 decades of, I guess, a digital transformation, if you will, that almost every industry with a more traditional analog business model has been going through. So if banking has rapidly changed over to a more digital delivery framework, there appears to be that many of the traditional industries are going through the same type of phenomenon, as well as our digital human, as even your book says, right, is moving towards a very new model of interaction with the businesses on a day-to-day basis. Would you say that that's a true statement, or is it isolated to FinTech?
Yeah, I mean, if I summarize the book that came out in 2014, Digital Bank, in one line, it's basically banks were built for the physical distribution of paper through buildings with humans, and now they need to deal with the digital distribution of data through software and servers. And that applies just as easily to a Walmart or a Walgreens or any company, in terms of they were all built pre the internet for physical distribution structures, and now they're having to look at digital distribution structures. Yeah. And we've seen this friction in every industry, but I plow my turf just in the one industry, which is in financial services, because I understand insurance and investment and retail banking in depth. I also understand technology in depth, which is a fortunate space for me to be in, because when FinTech came around, I was kind of the guy.
It begs to ask the question, when we think to how we're adapting the world, and our listener base obviously is developers and DevOps practitioners, and I think about this model of digital access in your life, whether it's your bank, whether it's the retail experience on a day-to-day basis, or even your learning experience on a day-to-day basis. For many students, that's all online today. It begs to ask the question, and specifically so for, I think, banking and fintechs, where the very basic fundamentals of feeling secure and feeling like you're in a safe environment. There's something to be said about the brick and mortar experience of going to a bank where you're shuffling this paper and then feeling comfortable in a future. For software developers, would you say that the innovation cannot occur without security, compliance, or is this a field that can out-innovate and the human being will change its point of view on what it means to be secure? Or is it just us, maybe me, from the older times, who is used to going to brick and mortar, that maybe is a little bit more reluctant in that shift, but clearly the shift is happening. So what play does security have in this new world?
It's a really difficult question, Shawn, because as you were talking, I was thinking about Humpty Dumpty sat on a wall, Humpty Dumpty had a great fall. And you may say, what's that got to do with security? But it's basically, when we look at particularly Gen Z and millennials and the next generations coming through, they have a very different attitude to security and money to me as an older generation. So for me, I want my money in a bank because it's regulated and licensed, and it has to have compliance and government authority and oversight and reimbursement under insurance schemes if they lose my money. But when you look at what's happening with cryptocurrencies, Dogecoin, Shiba Inu, or if you look at Robinhood, or any of these things that are happening at the moment, a lot of younger people are quite happy to just walk in and place their assets into companies that are not regulated and don't provide that guarantee of security that you have in a bank. And I think that's an interesting juxtaposition right now, because we're going to see a lot of failures. Last year, 2021, there was $14 billion stolen in cryptocurrency scams, and you don't get that back. But a lot of younger people, I guess, don't realize that's going to happen until it happens to them, and then they go, what happened? So,
Right.
It's kind of our generation maybe saying, on reflection, I would much rather be putting my money into a regulated exchange and a regulated store of value than in something that's the Wild West. But when we look at decentralized finance and what's happening there, DeFi, we are seeing a radical shift away from old institutions to new structures of trust. And the friction that's really there is your trust in the organization, in the government, or in the system and the network. And a lot of younger people are choosing the latter.
Yeah, you're right. I mean, do you think that in any way the pandemic itself and the last 2.5 years has accelerated the need for people to trust it as well? And I guess that's a little soft questions and a little ambiguous, but I think it's an important one, because I experienced my father for the very first time during the pandemic, due to the fear of COVID, for the first time access his bank digitally. He'd never done it before. He's 78, and it was a weird experience for him that he went through. But it's funny, now that he has done it, he swears by it, and so it was a major hump for him to get through. And I presume that there are, and maybe that's a wrong assumption, but I presume there's a lot more people like him that may have seen this revolution and gotten over that hump because of the pandemic. Would you agree that the pandemic may have accelerated a lot of this movement also, regardless of generation?
Absolutely. I mean, it's forced people to be digital, and some people to be purely digital. So my mum is 93 and she's still going strong, touch wood. She does everything online. She's completely digital. Maybe that's why I get what I do from. But she orders everything from the grocery store to be delivered via the website. She does all her banking online. And maybe she's an exception rather than a rule, but I think a lot of people have moved in that direction. And so, by way of example, with myself, I'm living in Poland. I don't speak Polish, but my wife is Polish, which is why I'm here, just outside Warsaw. But during the pandemic, I wanted to entertain my kids, and I've got 2 twin little boys who are 5 years old. So I was ordering everything via online stores to be delivered to the home. In fact, it got to the stage that the delivery guy knocked on the door one day and was surprised because we hadn't ordered anything. So he was just checking that we were still alive. It's kind of that extreme. Everything is now digital, and the pandemic has really turned that. And it's specifically when you look at the use of cash and you look at the use of digital downloads of financial services, there's been a massive shift with cash going down 20, 30, 40% in different regions of the world, digital banking going up 100% or more in other parts of the world. So there has been a radical shift.
Fair to say probably that the pandemic then, sounds like you're in agreement that the pandemic definitely has had a push. And do you think post-pandemic it sustains? And maybe that sounds a little bit like a leading question, but I have to wonder, because there are some things that we've gotten so used to accelerating and then becoming digital as a consequence of the pandemic, but I wonder whether they will stay. And one of those examples are things like online learning. I know my children went through 2 years of online learning now, and only this semester went back to school in person. But an unfortunate turn of events, they were exposed to somebody with COVID the other day, and so we had to take PCR testing, all of us. And when we did, we had to isolate, which we did. PCR test back Touchwood came back negative. And the day we asked them, we said, okay, well, time to go back to school. All three of them said, can we just stay home? And it was a big surprise to us that they chose to and wanted to just kind of stay home. And I couldn't help but think to myself whether some of these changes that were brought on by the pandemic that made us use digital services in a greater extent, some of these are here to stay. What would your thoughts be on what stays and what goes?
Well, there's two sides to the equation. One is the consumer citizen experience digesting digital, and the other is the provider, government, financial services company offering digital. And when I look at what's happened, particularly on the provider side, it's taken quite a while for them to get through the challenges of lockdown and the pandemic because they were not ready for it. And by way of example, one of the banks I deal with in Britain has most of their service offshore in India for customer calls and customer service. And India shut down with 4 hours notice, and suddenly there was no customer service and there was no way to take customer calls. And that lasted for actually almost a year. I mean, it's a long, long time. Yeah.
Wow.
And it was really bad. And it doesn't reflect well on the reputation of that institution.
Sure.
Others that were more geared up for digital, particularly the FinTech challenger and neobanks, switched just like that. I mean, it was seamless and you still got exactly the same level of service you had before because it was all digital anyway, so you didn't need to call anybody. I think for the consumer digesting digital, like your kids, a lot more online services will be accepted as the way to go. And I think a lot of people will start to trust far more the apps for financial services. And I kind of look at it as something that I went through when I first started using online services for finance 20 years ago, which is you begin with tippy-toe steps and you test things and you try things and you see if it works. And the more it works and the more you trust it, the more you put through it. So that's the real thing. It's about the trust in the digital service. What I find very difficult right now, and it's a bit of a deviant point, but maybe you experience this. I have a real problem with passwords and usernames because now there's so many, far too many. And equally, there's then layers of secure sign-ons on top of that using apps for one-time passwords and generating pins that are just once usable, and then you have to use some biometric on top of that. And it's like I've got to the stage I just can't be bothered. I've got so many online services, and particularly not just in finance, but many in finance. And I've just got to the stage I'm going, I just need to get rid of all this baggage because I can't be bothered remembering all this rubbish.
Right. No, I can definitely identify with that. I think you're bringing
just
up
as an aside, just to build on that point, when they launched the ATM, the guy who invented it asked his wife whether she thought a 6-digit PIN would be good, and she said, "No, I can only remember 4 numbers," and that's the reason why PINs are 4 numbers.
That is fascinating. I had no idea. Today, a 4 PIN is. I think by default, my iPhone doesn't even accept a 4 PIN. I have to actually go in and tell it that I want a 4 PIN code as opposed to a 6 PIN 6 number. No, but it's interesting. So while we're on the topic of staying power, if you will, of some of these shifts that are digital, they have profound impact on our economy, our lives, and in particular, as we focus on the economy itself, you've talked before about K-shaped economic recovery versus a more uniform recovery. And I kind of think about it as, for our listeners, just to, kind of get a scope of what that means who are not familiar with K-shaped economic recovery. It's kind of like for a developer, think if you have 4 variables, A, B, C, and D, and all 4 variables have a value between 0 and 10. And let's say they all fell by 4 a uniform recovery would make each one of those equally come back up to their previous value at the ratio that they fell. So they'd come back to previous values, and it's uniform, they all rise. But K-shaped economic recovery would say that the rate of return of each one of these variables would be different and not the same. And some might make, not only recoveries, but growth, and others may not. So I'd love to ask you, when you think about and talk about K-shaped economic recovery post-recessions and especially post-pandemic, what does that look like for us? What do you think will, among these variables, recover and boost and grow economically, and which may we see that kind of disappear?
Yeah, I mean, a lot of economists are talking about a U or a V or a W-shaped pandemic, which from an economic viewpoint would basically mean either a slow downturn and then an upturn, a sharp downturn and an upturn, or a sharp downturn and an upturn, and then another sharp downturn and another upturn. The reason why I use the K is actually because the upper part of the K for me is digital and the lower part of the K is analog or physical. And what I think we're seeing is a long, slow recovery, which is probably W-shaped for the lower part of the K, which is the physical stores, the physical airlines, the physical services that you might want to use. Because a lot of us are still averse to going to a restaurant or going out and maybe even into a cinema. And that will last for a while longer. And then I think it might last for a long term, because if you get dual release between cinema and streaming, what would you prefer to do? Watch it on your big HD Ultra TV at home, or go out and spend a lot more money to go to the cinema and maybe get coronavirus? That's kind of the choice right now. So the physical side on the lower part of the K is going off a cliff and has been for quite some time. And that's the reason why you're seeing so many restaurants closing and so many retailers closing. The upper side on the K being digital is the Amazons and the Netflix and the Spotifys and the Facebooks and all of the digital companies that are making megabucks. I mean, they've just gone through the roof. Apple has just become the first $3 trillion value company in the history of the world. I mean, it's incredible. And that's because those services are delivering. They have challenges in that I can't get an iPhone 13 because of supply chain issues within the Apple structures. And so supply chain is actually part of the challenges that they have. But the upper side of the K is definitely, if you're truly digital, then you're making megabucks. If you're truly physical, then you better go and get a bailout.
Yeah, that's very interesting. There feels to me that there's definitely some industries that, might, even based on your definition of the digital side of things versus the physical analog experience side of things, in this K-shaped recovery, some that might just not have an opportunity to recover because the service rendered itself, aside from the delivery of it to your home or to your location, doesn't have a digital equivalent. And I can see how, what you said, restaurant services, cinemas, and so on and so forth, that typically had much more of a, brick and mortar or an analog sort of experience economically. They're for many of them, where they require the human being to be there, that might not be an equivalent there. So
what it really says for those organizations is they've got to offer mega super experiences that are far beyond what they offered before. And it's quite interesting from my side, because I went back to the UK recently and wanted to see the new Spider-Man movie, which I saw in IMAX. It was amazing. And I was sitting there thinking, my cinema never had IMAX before. Now it does.
That's an interesting point. That is an interesting point. So your thought process here is also, not only do you have the digital transformation, but also it outsized experience growth or innovation in the outsizing of the previous experience pre-pandemic that will draw the crowds, which may actually benefit mankind in many ways across industries, because there's many traditional experiences like that have lagged in innovation. This forces for them to innovate in many ways beyond just the digital conversion, but in fact the analog experience itself to compete and stay alive.
And again, on that note, Shawn, when we talk about innovation, it's easy to use the word, but how do you actually make it happen? And one of the things coming through the pandemic, which I've used with a lot of my financial customers to illustrate this, is how would you build a financial company that had customers on Mars, a head office on the moon, and employees on Earth? Because effectively, that's what you have to build today. During the pandemic, your customers might as well have been on Mars, your head office might as well have been on the moon, and your employees were on Earth. But we're moving to a business model that has to be built for purely digital connectivity, and then augment that with amazing customer and human experiences on top.
Right. That is such a fascinating way of thinking about it. I appreciating you sharing that. Makes me think of an example here the other day. I just read it not too long ago. I felt it to be very weird, but apparently my son had no problems with it and thought that's how it should be. And that is actually that there was a couple of basketball players in the American Basketball League here that recently signed contracts to play with a team with a very here in the U.S. League. The owners of that basketball league team are all over U.S. and Europe, and then it's managed, obviously, and coached here and plays here. And the players had been asked how they wanted to be paid, and this kind of segues into cryptocurrency. They had said, "Pay us in Bitcoin." And they're the very first two players that, instead of being salaried to local currencies, are now being paid in cryptocurrency to play here by investors that are somewhere else. And you think about that experience of a traditional, organization that banks with somebody else, management across Europe and U.S., league in America, players on the court running around in multiple cities playing, but the payment happening entirely digital. I don't know what you think about cryptocurrencies, but is that the future? And I guess that's equally as much a question of digital currencies versus traditional. But it's a fascinating and evolving space, and I think about staying power, and I wonder what your thoughts would be on the current stage of cryptocurrencies, its staying power, and where you see it going.
Well, you kind of drop down a rabbit hole when you get into cryptocurrencies, because it could be a conversation that takes up the next 10 hours. And
for sure.
We need to keep it short. But, I've been tracking Bitcoin for over a decade. And to begin with, I was skeptical because I didn't understand it. And a lot of people said that I was an old school person because I said that you can't have money without government. But I didn't say the government had to be the Federal Reserve or Joe Biden. What I was saying is government has to be a structure that governs the trust in money. And over the last decade, the evolution of cryptocurrencies is creating that structure of trust through the network in the store of value and the exchange of value of cryptocurrencies, which is why they're becoming very interesting. And even though there are a lot of scams, and even though people have lost a lot of money on cryptocurrencies, some of them are becoming a staple behind a lot of business. I'm particularly a fan of Ethereum because I think Ethereum has far more relevance for corporations and government than Bitcoin. And the difference is that you can create permission networks that are relevant to government using Ethereum, whereas Bitcoin is completely permissionless and decentralized. And some people like the latter, and if they trust that, that's fine. Whereas I prefer the former because I'm more of a corporate person. what you end up with is a wealth of cryptocurrencies, and at the moment there's over 1,500 or more out there at last count, maybe even over 2,000 today. And so which ones do you choose?
Where do you choose? Right.
Yeah, and that's a challenge for a lot of businesses and a lot of people and a lot of governments. Governments are trying to stop the growth of cryptocurrencies by producing central bank digital currencies. Other people like Facebook with DM or Meta, shall I call them today, are trying to create stable coins using a basket of currencies in a digital form, and everything in between. But what's the most interesting thing, particularly in the last couple of years, with the explosion of the value of cryptocurrencies, is banks like JP Morgan Chase and State Street and Goldman Sachs and more are all piling in and saying, we will offer you crypto services. And I think Jamie Dimon summarized it best, which is, I hate Bitcoin, but if you want Bitcoin, we'll provide it.
Right. You're right that we could go through or fall into many rabbit holes here and deep ones it might take. But one last question on this one. As we talk about, just generally where cryptocurrency state is, and I want to discuss just for a second El Salvador and their decision to accept crypto as a valid form of payment nationwide for everyone. And do you have any thoughts or any knowledge about what that model has yielded so far for them, and what do you think that means for the global economy as we move forward? Will we see more El Salvadors? Is that where we're headed?
Oh, we're seeing a lot more El Salvadors. In fact, the April Fool joke that I posted on my blog last year is the number one read on my blog for all time, which was Venezuela moves into using Bitcoin as a currency. Brazil's looking at Bitcoin as a currency. Nigeria is looking at Bitcoin as a currency. Turkey has just announced that they're looking at Bitcoin and crypto as currencies as an alternative to their own national fiat currencies. And the reason for this is that if you take all of those nations, they've seen a massive drop in the value of their nation state fiat currencies. I was just reading about Turkey, I think saw in 2021, the value of their currency dropped by 44%. And so if you want to hedge against your government currencies to have stability, not only does crypto and Bitcoin specifically offer an alternative, but an alternative that many of these nations believe will rise. The issue then that everybody who's a traditional banker brings to a head is to say, why would it continue to rise when there's no asset that backs the currency? And then the answer is, well, the network backs the currency and we trust the network. So it's difficult to get the head around it when you're an old school banker, because you want the government to back the currency, not the network. Right. But the network is now the government. And I come back to this theme regularly, which is when you look at the internet, does the internet recognize the difference between Ecuador, Venezuela, El Salvador, Brazil? Does it recognize the difference between Nigeria and Ethiopia and Kenya? Does it recognize the difference between Turkey and Saudi Arabia and United Arab Emirates? No, because our world has actually got no borders. Physically, there are no borders in our world in the way in which Earth is structured. The only borders exist because of governments.
That's right. That's right. Let's talk a little bit about...
The network doesn't recognize governments. The network...
That is correct. The network does not.
No, the network thinks it's just a world.
It's one unit. Let's talk a little bit about evolution. I know we're coming to the end of our podcast here, but I did want to talk a little bit about FinTech and its evolution as it moves forward. There are particularly a lot of technologies that developers are working on daily to enhance not only the experience, but the services offered, innovating in the way that they arrive to you, the service model itself. And I tend to think that AI or artificial intelligence plays a huge part in that. and will profoundly impact the industry. But that's only my opinion. What matters more is I'd love to hear how you think about the development of new software, new capabilities, features in the fintech space, and will a lot of them be affected by artificial intelligence at its core?
Sure. I mean, we created a company called 11FS to provide digital delivery services for financial firms. And the reason it's called 11FS is, it's not good enough to turn it up to 10. You've got to turn it up louder to 11.
Okay.
And equally, one of the phrases we have is digital is just 1% done. And so we have a long way to go. And I still think we're on a very early start of the transformational process and the revolution of the digital network world.
Right.
I've talked a lot about the digital world being the fourth revolution of mankind. So we started with creating civilizations, and then we created industry, and now we're creating digital connectivity, and next we'll create multiplanetary species, which is Elon Musk's vision. So we're on a very early journey into the network connected world, and AI is a core part of that. But if you look at AI today, a lot of people talk about chatbots or automating processes using intelligence. They're not talking about true avatar, interactive human level machines. And in fact, there are several levels of artificial intelligence. So we've moved from a machine that could just play Jeopardy or Go, AlphaGo, to ones that can play several games, to ones that will very soon be able to be almost sentient. They'll be able to be doing an awful lot of tasks. And you combine that with robotics. So AI and robotics will be one of the big revolutions of the 2020s, 2030s. Then you bring in quantum computing. So we're just moving into blockchain-based worlds of ledgers. Quantum computing will magnify that to 11. So it's going to turn up the noise dramatically. And unlimited power, unlimited storage, unlimited bandwidth. We really are becoming a species that's half machine and half human, which may sound a terrible vision, but actually, I actually quite like being half machine. I spend most of my time on the network, on my phone, on my laptop. I'm half machine anyway.
I know of a few Hollywood shows that have half human, half robots. I'm just being funny. I think I see what you're saying and I understand it, and I couldn't agree more. The speed at which this is evolving is astonishing, and we might just be in the very early nascent infancy stage of what's truly possible and what the imagination will hold for these services, these products, offerings, and how these business models continue to evolve. So I could really see that. One thing that developers very often talk about and have to face is, however, especially in fintech or financial services, is a growing list of security, but also compliance. And this is critical for them. And I'd like to sort of end on this note and get a little bit of thoughts on you on the topic of compliance. And it becomes really important for developers in the scope of, we want to deliver innovation really, really fast, or we need to deliver innovation very fast to market because it's the only way to stay competitive. And every bank is catching on, or every bank is understanding they're no longer simply a bank, but they are a technology first bank or fintech, right? So, and insofar as delivering that, it becomes critical to pass the threshold for compliant software, for security software, which on the face of it could seem like it's the contrary force to speed, and in fact slows things down. But you can't live in a world where you're exclusive to either one or the other. You can't survive. One would be a capability that's delivered fast but isn't safe, or one that's delivered too late but is safe. So in those two worlds of compliance, the need for speed to deliver innovation, is that point of view something that you identify with, or would you say the challenges compliance will be entirely different as that balancing act has to occur for FinTech moving forward?
Again, Shawn, it could be a very long answer. I'll try and keep it short, in that a lot of financial companies use compliance as an excuse not to do something. And they say the regulator won't allow it, when actually the regulator doesn't even know what they're being asked to allow, and probably would allow it if you asked them. And I coined the phrase banking as a service 15 years ago. I claim to own that phrase, and now it's used everywhere. But when you look at defining banking as a service, yes, it's cloud-based, but it's actually about a new front, middle, and back office. So the traditional front, middle, and back office of a bank was front office was building with human, typically a branch. Middle office was the infrastructure, processing and connecting front and back office. And back office was head office, full of administrators and accountants. Whereas now, front office is apps, middle office is APIs in open banking ecosystems, and back office is analytics of data. And the reason why I bring that into the equation is that when you look at compliance and regulations, that's just a plug and play piece of code as an API in the ecosystem to handle a specific requirement from a specific piece of regulation. And when I met a lot of banks recently that are doing digital transformation well, they take the attitude that you don't separate technology and the business. Technology is business, business is technology. So you have compliance people sitting with designers and developers in small teams that are agile and can develop and design their specific piece of regulatory compliance that day and deploy it that evening into the network. They don't need to look at the whole regulation, just the specific part of the process that needs a change. And that to me is where the banks that get this are being really clever, because they're moving into a development structure where they can develop changes in regulatory compliance structures in minutes and hours and days, far faster than if you try to change the whole system. Because you don't really have a whole system anymore. It shouldn't be a whole system. It should be a microservices architecture of pieces.
I want to thank you, Chris, for being with us today. It's been such a pleasure listening to you, and I wish we had another 10 hour and we could keep going and really dig into some of these topics. But I hope for our audience of developers, there's a lot of inspiration to draw from the time we spent together, both in terms of where innovation can be, what things to develop, and what things need to be balanced, and what even mankind and the human experience will look like in the form of digital experiences in the financial services industry moving forward. I'm going to ask you one last question to just sort of end the interview, and I'd love for you to just kind of step back from the details that we kind of gone through today, and I'd like to end with just asking things like, we talked about FinTech, adoption, crypto, we talked about AI, we talked about compliance and global concerns about that. All of these things are going to come together. And then in a short version, all of these things are coming together, and there's a future out there 5, 10, 15 years from now. What do you think that looks like?
Well, we hope there's a future out there 5, 10, 15 years from now, depending on what temperature Earth reaches. And this is where it gets interesting for me right now, because a lot of the traditional financial firms that I've been speaking to for 15 plus years, I've been saying digital transformation, digital transformation, digital transformation, and a lot of the things we've talked about in this conversation. And if they haven't actually got there yet, then they're too late, because now I'm talking about digital for good, and how can we bring finance and technology together to change the planet and do good for society. Because a lot of banks were accused of being socially useless in the financial crisis of 2008. How can they become socially useful? And technology can help do that. And this is a big theme. It's been coming through for quite a while, which is purpose-driven banking and purpose-driven businesses. What do you stand for? If you don't stand for something, you fall down. So what we're seeing 15 years from now, I can imagine, is most financial instruments being based on renewable and carbon offset structures driven by technology that enable radical change away from the fossil fuel industries that we're funding and using today to new forms of energy tomorrow. And the financial system with technology sits at the heart of that transition. So by 2035, it's not about electric vehicles. It's much more around sustainable structures in cities and in economies and in countries and nations to make sure that we have an earth for our children and grandchildren that we can hand over to them.
Chris, what a perfectly splendid and noble idea. And that is a future I definitely want to be part of. Thank you for being with us today and sharing your insights and hopefully inspiring many, many developers around the world, myself, to think about the world and how to find nuggets of good and inspiration for things we can develop and how we can continuously evolve the world. I appreciate that time, and I hope you'll continue to be safe and healthy during the pandemic, and hope to have you back on the show sometime soon.
Yeah, thanks, Shawn. I should obviously make the shameless plug for thefinancer.com, where I blog every single day and have for 15 years, and also for chrisskinner.global if you want to know more about me and my books.
Absolutely. Thank you so much, and we'll see you again soon.
Thank you. Take care.
Take care. Bye-bye.
Bye now.
DevOps Radio is a production of CloudBees, Foxdog Consultants, and lived and produced. This show is produced by Sneha John, Adam Jaffe, Brian Cray, Dave Spalding, Lisa Bergqvist, and Shawn Ahmed. You can find us on iTunes, Apple Podcasts, and cloudbees.com. Make sure to follow, subscribe, and rate with a big 5 stars on your favorite podcast app, and follow CloudBees and your host, Shawn Ahmed, on all social media channels. We've got links to everything in the show notes. All of us at CloudBees are here to help practitioners create better DevOps for all. So go out and build great stuff.